Good afternoon, all. CamelbackTrading.org coming to you this Wednesday afternoon, December 1st, and we're looking at Window Trader's market profile of SPY, IWM, and Triple Qs. And boy, oh boy, a lot to talk about. What a start to the final month of this year. It looked like after yesterday's sell-off, buyers were going to wrestle control back. They had a tremendous start to the day in all three of these indices. A little nuance we had early was we attempted a trend day up in SPY and ES 3 times, only to have all three sets of single prints filled. And then the bottom fell out when we took out the IB low, A's low. We took out the IB high in C, but then took out the IB low, and all hell broke loose as the market was incredibly mechanical. I made decent money on some longs when we first started coming down. Had excellent trade location today, shorted the high of the day in D, shorted the high of M period right against last month's low. We thought that was a great visual area. Didn't capture all this, but we captured a bunch. Three times I did it when it got around M's low. I'll go over all my trades in a moment. A big reason that we've had these ranges is because our destinations and reference points are so far and wide apart that these short-term algos have to reach for something. We have 120 million on the tape already. We did 140-something million yesterday. We blew through the 50. They didn't even stop at it when we got through it. Now, is this long-term sellers starting to rear their head? I'm not sure yet. I can tell you what, it wasn't yesterday. It certainly wasn't earlier in the day. It remains to be seen. What is a fact is there are no time frames up now in the SPY or ES. It's been a while since then. The monthly is now balanced. We took out last month's low the first day of December after taking out yesterday's high. So not only is the monthly balanced, but we have an outside day down. So after all the good feeling, both us and Russell have outside days down. Russell is so far inside of that 8-month balance, they're only $5 off that balance low. The balance high was 234.43. The balance low is 207 and change. They got down to 212 and change. We said it wouldn't be a good thing if they got sucked back into that because the opposite end of that balance is the destination. Well, by goodness, they almost got there already. We took back, remember we had all the upside destinations yesterday. We took them all back. Guess what? We have them all back again. K's high in SPY is 6 cents higher than J's high. That's my afternoon rally high. Now, ES did not stop one time framing down because they only took it out by a tick. SPY took it out by 3 cents, so I consider that stop. That's the only time frame from the day's high that went up. We one time frame down the whole day. Go out with a price probe. We wiped out a lot of destinations. Now, last night I said I wouldn't be surprised we get that 450 weekly low and fill the gap. That was after last night's close. This morning, I never in a million years would have expected that after what we did today. I thought we were going to defend the monthly low. Maybe that's all the sellers wanted to do. And now the buyers are going to try to have some kind of rally here to start the month of December and have a Christmas rally. Well, based on what just transpired here, like I said, one day doesn't make a market. But here's my line in the sand. Last month's low and now single prints. If buyers fail to get back this trend day, in the near future, we will not see a new high this year. And in fact, we might go and test the 440 level, at least if not the 426 level, which is the other monthly low and the 200-day moving average. So buyers need to get their act in gear sooner rather than later, because if there's no rally back above these single prints and back inside of last month's range to at least start repairing some of the damage that would happen this afternoon, well, then we're going to look lower and making new highs for this year are probably out the window. Now, as far as my trades, I did a lot of trades. I had a very good day, and I didn't do anything really big. I was long in A period. When we came in against yesterday's value high, turned out to be a really nice trade. The 460 calls came in against value high, bounced off it, and went right up. Beautiful long. Then I took a short in B period the first time against yesterday A's high. It stopped there to the penny with the 464 puts. So I did the 460 calls in A, the 464 puts in B, backed off. C period, because we had single prints. Took a long initially, 2 times scalped them before we stopped the 1-time framing up. So did okay on the 461s. Then I took a short when it came back up and took out B's high. I'm like, okay, we're not getting against yesterday's high. We usually don't take it out that quick. Shorted it in C. Did the same thing in D with 466 puts. So it was 465 puts in C, 466 in D. Because I thought the market got way stretched out from where we closed last night. Those worked out. Shorted the high of the day. Too bad I didn't hold it. My goodness. Then I took a small loss in G when we came in. I thought maybe we're going to have an afternoon pullback. We had higher value. We had indices that are up. We had 5 wide up here. Well, obviously I was wrong. Took a small long. Got below the opening, got out for the loss. Now, I did not partake in this flush because I didn't believe in it at first. We still had higher value. We still had a higher POC. I didn't know, I didn't want to take a short and all of a sudden it reversed. What I did do is take a long in I right when it got to the POC from yesterday, which worked out very nicely. Bounced right off it for a nice long. K period. I thought K was going to pop J's high. So right before it did, I took a small long. It did pop it, but then came right in. Came in enough. I was like, I don't like this. Excuse me. Took it off for a loss. Nothing big. And then in M period, scalped shorts 3 times right below last month's low. That worked out very nicely. So an excellent day overall. My 2 losses, the one in G, the one in K, were not big whatsoever because I didn't get stubborn. I said, below the opening in G, I'm out. And then when K took out J's high and got nothing for it and came in, got out for minimal losses. We're going to have tremendous opportunities going forward. When you have a $14 range and this kind of volume, well, guess what? You're going to get opportunities. So you don't have to play big. And I didn't and still did very well. Now, upside destinations. First one is L's low where we probed from, 453.13. Now, where did they have us closing? They have us closing at 450.50. So for now, we're over $2.50 away from our first upside destination. Then we have the single prints. M's high to J's low, 455.39 to 456.35. So, I'm sorry, 456.85. So a little bit over $1.50. Then we have the afternoon rally high in K, exactly where J's was yesterday, 459.38, and then we have today's high of 464.67. Amazing. For the downside, 450.29 is today's low. Then we have 450.19, 9 wide from October 19th. Just missed it. Then we have 449.60, and please write all these down. Afternoon pullback low from October 19th. Now we start getting to those gaps we were talking about. 448.27, daily low, filling a gap at 447.55, a 72-point gap from October 19th. 447.36, price probe from October 18th. 446.78, 9 wide from October 18th. Single prints, 446.36 to 05 from October 18th. Another set, 445.78.77, only 2 cents from October 18th. And the last one I'll give you, 443.27, which is the next big target, weekly low, filling a gap at 442.66, 61-point gap from October 15th. I am not repeating these in the near future, so please write these down. Now, let's go to the charts. And I know this is a little longer, but I think today warrants a breakdown of what just transpired here. So here's our monthly. I had a trend line, by the way, from March's low up to now. Look at that. We broke it for the first time since March of 2020. We took out last month's low. We are now in balance. For now, remember, it's December 1st only. I'll call it a 2-month balance. If we get any more distance to the downside, it will be a 3-month balance. And then the next big level destination is 426.36, which is October's monthly low. So we are in balance. Weekly is down. Don't forget, we had an outside week down last week. Well, it looked like it was going to get absolutely embarrassed a couple of days, but now look at it. That week's low is 466.23. We're $16 below that now. So the outside week down is finally paying, and it's only Wednesday. Next destination, like I said, is 443.27. I think we could possibly get there. It would make a nice push down. It would be down and then maybe come into balance around that level. Now, why is that level important to hold? Because if you don't hold that level on the daily, right? Look at this trend line that we blew through a bunch of days ago. I'm taking that off. Now, it didn't even stop at the 50. The 50 is at 452.71. So we closed $2 below it. Now, one day does not make a market. And every time we hit the 50 all year, we bounced off it except this stretch here, which took a lot of time to get back over it. And then we went to new highs. That's why it's so important to me that two things. We get back above the 50 and we get back inside last month's range. If you do that sooner rather than later, maybe they could save, the month of December and get a decent push up. I don't know if we'll make new highs, but at least you'd have a chance to maybe go make a new high. Okay? However, if we can't get back into last month's range and we get acceptance below the 50 like we did here, well then there's some pain here. And you're going to go see 443, you're going to go see 440, and then below that is 426. And guess what? The 200-day moving average, which I didn't think we had a chance of seeing this year, is at 428.92. So everything's on the table right now after the first day of December because of what transpired today. Believe it or not, I'm calling this balance, but it's an outside day down because we did take out yesterday's high to put us into balance. If we take out today's low, we're right back to down on the daily. If we have an inside day, it'll still be balanced for me. But the big thing to keep in mind is the 50, the last month's low for buyers need acceptance above it. If you're a bear, you want to stay below those, and then you want to get 443, 440 level, and then the 200-day moving average. Hope you held your own today. We had a great day in CamelbackTrading.org's voice channel room. We really kept things calm and cool. Explain what was going on. If we didn't know what was going on, we said we were neutral and stayed out of it, which is just as much as saying, just throwing something out there. So come check us out at CamelbackTrading.org. Have a great night, and we'll speak prior to the opening tomorrow.